Next video, on the VPA series, we're going to talk about testing pattern. Testing pattern is something we just covered in the last video, so I'm going to combine climax pattern as well, which we also talked about in the last video in a bull and stage analysis. But the testing supply, really understanding the psychology of why they do it, is it's their insurance. It's their insurance policy to test supply, right? Testing supply at high levels to make sure that all selling has been absorbed so that they can continue the trend in accumulation phase and make sure that the market is ready and receptive, primed and ready to move at much higher levels. So does this make sense to you guys? Yeah, it should make sense to you if you've watched the last video. I know it was a longer video, but it's all good once you actually start to understand the market in terms of a market maker. So the tested supply is made to make sure that all selling has been absorbed. All selling has been absorbed. So you can see that this one here was a good test because they tested the stop loss, the stop hunts, whatever, and it was on low volume, which means that supply selling has been absorbed, that there's no stops, there's no selling. It's good, it can continue upwards. They don't because if they start seeing big volume, this means that this is costing them more money to and is a higher risk in order for them to push the prices higher. They don't want to be the ones buying at the high levels, they want to be buying at the low levels. So the test is to gauge the market's reaction and to check that all selling has been absorbed in the accumulation phase. So there's no more resistance selling overhead, right? There's no resistance. It's ready to fly. So it's ready for continuation, move higher levels to higher vibrations. So thus, vibrations that basically means the Fibonacci nodes and levels. So thus below is a good test example caused by low volume and low supply selling. It means that the market makers are ready to continue the uptrend. This is the picture that we're talking about. They're ready because there's no supply, okay, coming in the market. But on the other hand, if there's too much overhead supply and the market makers push down the price into the congestion to shake out the weak hands and reaccumulate, they continue to do this until remaining selling supply. Let me reread this, because if there's too much overhead supply, the market makers will push down the price into the last congestion to shake out the weak hands and to reaccumulate. So they see that there's a lot of weak hands, sellers, and that they'll continue to push down the market until that they reaccumulate and to shake them out, basically. So they continue to do this until all remaining selling supply has been absorbed. And once the selling supply has been absorbed, this is basically your signal to continue the trend. So, and the resistance is clear, the market is ready to move higher. So the testing supply happens often after accumulation phases as their insurance, right? When the insiders want to test if the market is ready to move higher as their insurance, or if there's an oversupply in the market, testing overhead supply. A lot of times they'll use like a moving average or something like that as their insurance as well, to stay above it, to trend above it, and to shake out anybody above it. So that's a good little check if the moving average is pointing up or if it's pointing down, basically. That's a rule. That's definitely a rule. I haven't written it here, but it's a rule. I use the 30 or the 10 MA, just one. I also have like multiple EMAs, but that's for a different strategy, more so for bots trading. Yeah. So usually tests are made when testing a previous area of resistance. So remember that whenever BTC or any market hits another resistance, that's where test of previous supply, because they want to see how many selling, how many shakeout, how many weekends are there, how many sellers are actually in the market, if it's a supply or if it's in demand. That's what Bitcoin's at right now. So Bitcoin is at a resistance right now, right here, and they're testing if it's going to if we're in a supply territory or if there's still demand for this thing to continue upwards. So yeah, next So thus, if there is confirmation of too much overhead supply, when there's too much supply, they will need to restart their mopping up campaign or absorption campaign. So remember, the test should be done on low volume. This is the rule that you should probably write down if you're writing notes. Remember, tests should be done on low volume as confirmation that supply has been absorbed and ready to move higher. If not, they will need to shake out the weak hands, aka the overhead supply. So they need to make sure that the supply has been absorbed. Just like when it comes, we called it the mopping up. You know, when you spill something on the floor, you need to mop it up. The first sweep, you mop it up, but there's still remaining supply, right, on the ground. So, and on the floor. So you need to mop it up again in order to absorb all the supply, and then for the floor to be ready to, walk on and ready to go, and related to the market is ready to trend. And so this is an example of a bad test because there's a lot of volume. Supply selling, meaning the supply hasn't been all absorbed yet. Just like, again, with a mopping up campaign, when there's like a bunch of spillage and you mop it up and there's still so much, it's like, wow, is it even worth it? Or it's like, you know what I mean? Let it dry itself. Yeah, so let's continue here for testing demand. This is really, really uncovering the psychology of the markets, if you guys haven't noticed yet. This is why I recommend reading the book. But I hope that these videos and this Discord is a little bit valuable to you and to your friends that actually want to become professional traders and think about the market in the proper way. So the tests of demand are required to check if demand is low and distribution is complete, meaning all buying has been absorbed. Let me reread that. Sorry, the neighbor's distracting. Testing demand. Tests of demand are required to check if demand is low and distribution is complete, meaning all the buying has been absorbed in the distribution so that there's no more buying. So that's why demand, tests of demand, tests of buying, really. So buying demand. You want to see low buy volume in a testing demand phase to see, to confirm that there's no more buying. Right now, if we take a look at Bitcoin and we apply these rules, we kind of understand that there is a lot of, I would say this is decent volume, be honest with you. I know it's below average, but it's decent volume, and it's like there's a little bit of absorption. So let's take a look at what this is, what this means. I guess it depends what trend you're looking for, right? Is this being bought or is this being sold? Right? Is this being demanded or is this being supplied? Is there more supply or is there more demand that's going to come in the market? These are the questions that we continuously need to ask as traders in order to anticipate the market movements. And by building a mastermind and that understand these concepts and these principles, we'll be greater together. Just like a battery is better when plugged into multiple batteries. But here's the thing. The battery needs to be charged and ready to go. All the batteries need to be charged on the same page and ready to go. If there's one battery that's dead, the whole pack dies. Okay? If one battery is dead, the whole pack dies. So that's why I'm saying that in this Discord, I need to filter out who is the dead batteries and who's alive, right? And probably I'm going to filter out most of them, but we'll see. By September, that time will come, and we will know who is the serious in the group and who is not, who's got to go. Even all these groups here, I'm going to get rid of them, but I'm trying to find the best players that we can actually grow, a mastermind team, and that understand these stuff, that actually care about their trading accounts. So, and they have goals. You want to see low buying volume. Demand confirms buying. So they want, market makers, they want to move prices down so that they can reaccumulate at low levels. You have to really understand the psychology, the reason, the thinking behind the market makers, right? Their reason for trading and to be in the market is to make money, to make profits. And the only way they can do that is to buy low and sell high, right? So that they can reaccumulate at low levels, shaking people out, and then the test should be made on low volume. In an uptrend phase, these guys, they don't want to see huge sell volumes because it shows that there's still supply. That's why kind of understanding a little bit of how much supply is in the market. Like on BTC, we know the supply is 21 million minus, 4 million from Satoshi or whatever it is, and whatnot. So good test because low volume and buying demand. That's something you kind of want to take a look at. Any market, it's like, okay, if that supply comes in the market, Bitcoin is going to be destroyed. It's yeah, but apparently it's not. So we'll see. So here's a bad test because of the large volume and high buying demand. So right here, there's a lot of volume testing in the market, lots of volume. Which basically means that there's still interest in the market. Okay, that's the testing pattern, and that they don't want to see this. This is a bad test because large buying volume, high interest. This is a good test because there's no interest, and that you want to be selling this right here. You want to continue to trend it up. Go over this lesson a couple times, read this, really try to understand it, because this one took me a while to understand. This is the insurance policy for the market makers. That's what you really need to understand, is about the thinking about behind it, because they don't want to be selling if there's going to be continuation of buying, right? They want to continue to go with the trend. So next thing is going to be the climax pattern, and the climax pattern is going to end this video off. It's for the series in the section. The selling climax pattern is when this pattern shows up in following distribution pattern, right? Because this is in a distribution pattern. It's sending a clear signal that the market is ready to move fast. If you guys seen my bull stage analysis video, this is what we were talking about when we're talking about the market cycles, right? So there's market cycles, this is the uptrend phase, and this is distribution phase, one of the last cycles right here, before the downtrend. And so this selling climax, we've already really covered it, but we're going to cover it in more detail. It's basically volume and then the candles right here, rejection at the inside of a distribution phase. So it's sending a clear signal that the market is ready to move fast, and when the inside, because this is huge distribution, which means somebody is buying. Somebody is buying the top, which is called a bull trap, a huge trap right here at the top. And which causes huge. That's what happened with BTC, right? So if you guys knew what that market maker strategies, because they want to reaccumulate at low prices, and realistically, they want when we're talking about Bitcoin, they want to accumulate spot specifically at low, because if they value Bitcoin as a real commodity or as a real asset, they want spot. They want the real deal, and they do not want futures, although they will use futures to manipulate prices, because that's the most pure market that there can be. That's what Anna says anyways. So it's a bull trap pattern. This is a bull trap pattern at high levels of distribution to the public, especially on high volume. You want to see higher volumes. You want to see FOMO, participation. You want to see, fear of missing out, FOMO. For more details and support resistance sections, yeah, this is where we get into the emotions of this range pattern, because some patterns and plays are not going to suit your personality. For example, do I like trading ranges? Not really, especially not on low time frames, because I call that chop. I like trending phases. And so knowing how to isolate that is one of the key things on how to make money in the market. So and trade successfully is by isolating and anticipating the market phases. There's really only 4 phases. Some people say 6, some people say 7. Gann says 7 zones of activity, but realistically there's only 4. So there's accumulation, there's uptrend, and there's distribution, there's downtrend. So also to be on the lookout for long wicks in this pattern right here at the top on a distribution, possible distribution pattern. Sometimes they're going to stare, they're going to slap you right in the face. You know, it's going to be super obvious for you because you know this knowledge. But sometimes it's going to be less obvious, and so that you're going to have to combine it with other strategies. For example, these bearish patterns with volume. And that's why you look for not just the wave patterns, Elliott waves that we're going to get into, but also the wicks and the volume. I think this is why I'm starting off with the VPA, is because this is one of the most important. The thinking behind the market is one of the most important. And the the strategy, is to follow smart money. This is the strategy of the markets. Follow smart money, follow the big money, and everything else, the secondary, is the tactics on how to follow the big money, how to read what's actually going on, how to read the cause and effects, how to read the supply and demand. All right, so next is going to be the bearish closing candles, high volume, overbought. There's going to be divergence signals. Everything's, wave counts. Everything's going to be pointing, if you know your stuff, to the top. This is where the public and the greedy traders are over leveraged. This is such a key note right here that you want to take down, because you want to be able to anticipate when the market is over leveraged, overbought at the top, because the greedy traders are going to try to push the market higher, and they're going to go 10x leverage or whatever, 3x. We're going to leverage, they're going to use their profits, and they're going to try to push up the markets. But here's the smart money is actually selling out and looking to buy a lot cheaper at a discount with all the money that they've already made. So it's so smart if you can actually do this, like a professional. And that's why you have to think about these cycles, because they only come once in a blue moon, right? They only come, Jesse Livermore says 4 to 6 times a year that you are going to find a good trade like this, sometimes less, So on the lower time frames, you can basically, but on bigger time frames, guys, this is basically how they get rich, these big traders, right? That's our aim here. That's our aim. That's our objective. We want to make profits. We want to make a lot of money trading. So this is where the public and the greedy traders are over leveraged. This is where you start reading the signs of the time that it's going to reverse. Often the bulls gets trapped at the top. Remember the strategy. Always follow the big money. Thus, the insiders sell out, remaining the inventory. They sell out their supply. The smart money sells out their inventory, and they push down the prices to previous accumulation. Some people actually even short this pattern. They short. Some people will still long in their spot account, right? They'll long, but then they'll short in their margin account or whatever, because they want to hedge and that they want to buy. That's a good strategy too. You can make profits on your short and continue to hold your BTC. So that's very smart if you know how to do that. That's what Jesse Livermore suggested in his book, A Reminiscence of a Stock Operator, if you've seen the first video of the series. So the buying climax is, and by the way, VPA, the Anna talks about Jesse Livermore as one of the better books to understand the market psychology is Reminiscence of a Stock Operator. It's a story, right? So it's a decent book if you like storybooks on stock speculating. So the buying climax is the same thing, but it's the opposite. So this is often where over-leveraged short traders are trapped at the bottom, and they need to close their positions by buying on market, right, to take their profits. To close their positions, they're going to have to buy on market, the shorts, and that the smart ones are going to do it at the bottom here, right? And the smart money is going to start buying and accumulating more long positions to trend up the markets. And it's all about so closing their short positions by buying on market to take profits. They will also buy here when the high volume interest. So look for the long lower wicks at the bottom here, indicating a strong market by buying in bullish sentiments. Bullish sentiments, we've already covered the candlestick patterns with the volume, right? So we start to understand this is being accumulated. You also want to look for bullish candle closes right? The closes are extremely important, depending especially on the time frame, primary, secondary, and micro time frames with volumes. But you want to see like the higher time frames, right? The higher the time frame and the more time it takes, the more accumulation, the more mass pressure for it to go upward, the more confidence, basically, the more confidence. And we're going to talk about confidence and the emotions in the support and resistance section, so in 2 sections. All right, so hope you guys stay tuned. My computer literally just froze. Okay, so next, also we should be at the bottom of a trend. Yeah, so a bottom of a downtrend, basically it takes a little bit more time to accumulate than it does to distribute naturally, because it takes a little bit more time to get traders confidence back in the market, depending on what asset we're talking about, right? So for many believers in BTC, it's going to take a little bit less time, but yeah, it's all about thinking behind the market when it comes to that idea, because thinking precedes volume causes, and then volume precedes price action. So it's all about, again, you got to think about the market, thinking behind the market. So again, look for long wicks, indicating strong market buying and bullish sentiments. Also, you want to look for the candle closes with high volume, which is the cause of the price action, and you also should be at the bottom of the trend, right? We've already said, or yeah, previous fib level, oversold divergence areas, and familiar with RSI concepts. So those are secondary tactics in order to really understand what's going on with the smart money, with the big money, with the idea and the thinking behind the markets of this big money. I hope you guys like this video. 2121 shout out, and like, subscribe, and share it to anybody if you guys think that this is valuable content. Peace.